Hey everyone, welcome back to the Mark Loeffler Experience. Today we're going to be going through all 48 pages of the CMHC housing market assessment that was released on Tuesday, the September 28th. We're doing this so you don't have to go through all 48 pages of the report. I mean, we'll link it down below if you want to go through all 48 pages just for fun. What is a housing market assessment? I think that's pretty self-evident, but basically it looks at housing, financial, and economic systems, correlates that into if a market's overvalued or if it's undervalued, where's the vulnerability there, like how much of a risk is it to, say, have a price decline or a price increase. And they do this for a number of major municipalities across Canada. Basically, CMHC is saying that the market has moved from moderate vulnerability to high vulnerability. I don't think that's going to come as a shock to anyone. We've been talking about that for months and months and months. And, here we are. CMHC is, and by the way, this is a non-biased report. This is done by the economists on their staff. The economists on CMHC aren't trying to sell you anything. They might use this for a bit of policy. Yet this is just good information, in my opinion. Monetary, fiscal policy support, the global economic recovery, the rollout of mass vaccination programs over the first half of 2021 have underpinned an ongoing economic recovery in Canada. And obviously, the economy grows, housing market will usually grow. They can't explain some of the price growth. I think we've done a pretty good job here of explaining some of the house growth. Maybe they should hire me as an economist. Hey, if you guys are looking, I don't think I want to take a pay cut to work for CMHC. We've known this too. Existing home sales remained elevated relative to new listings. We've talked about that, right? Maintaining evidence of overheating in Canada. The degree of vulnerability of the housing market is high in Toronto and Montreal and low in Vancouver. Like they kind of switched. And you can see here's the overview of all the major markets in Canada. And by the way, if your market is not here, don't shoot the messenger. I didn't write the report. Tell CMHC you want your area included in their next report. But I got Victoria, Vancouver, Edmonton, Calgary, Saskatoon, Regina, Winnipeg, Hamilton, Toronto, Ottawa, Montreal, Quebec, Moncton, and Halifax. There's a lot of places that are still low vulnerability. Saskatoon, Vancouver now, right? It went from moderate to low. Regina, Winnipeg, Quebec City, Montreal. So some of the major markets that have had seen really high price increase, Hamilton, Toronto, Ottawa, Montreal, Moncton, and Halifax have gone from, or it stayed in high. Only Montreal went from moderate to high. And we're just going to go through this a little bit. Basically, they're saying that the rollout of vaccinations have helped improve the market fundamentals. And I would say, okay, maybe let's just dig into that a little bit. I would say first quarter of this year was a record. We've never had that many home sales in Canada in the first quarter of any quarter ever. It would have been a good first half the year typically. There was a lot of houses sold. Second quarter was still really strong. Third quarter, I'm going to tell you, is going to be slower. But it's still going to be a great quarter. It's going to be the second or third best year on record for the third quarter. It's just not going to compare to last year's. I agree that with the vaccinations, we don't have shutdowns. So no shutdowns lead to less government spending and increased economic activity because, businesses are open. You can go shop. People are working. Wages are going up. They're saying is the pandemic's third wave took hold in April 2021. That's when we were shut down again, right? And resulted in reinstatement of virus containment measures. These measures were as stringent as those implemented at the onset of the pandemic. Basically, their impact was not as severe. I don't think we were locked down as long. Here's a good thing. I'm just going to leave it at that. Yet, some people are going to argue this. So keyboard warriors are going to comment down below that immigration isn't good. Yet, at the end of the day, we have a shortage in labor in the hospitality industry right now. And number two, in manufacturing. So we need people who want to work those jobs because during the pandemic, when those places were shut down, people either retrained or went out and got other jobs. Again, people are going to comment down below that they should pay restaurant workers a fair wage. And I'm going to tell them that, we do and we pay benefits. And And I'm just going to say it's just going to take a little bit of time for people to come back into that industry. Again, immigration and, students weren't there. We would get students working at the restaurants or in hospitality. So I think it's just going to be some uptake just on a personal level. Anecdotally from our restaurants, we're seeing those roles being filled. I have a colleague of mine that owns a manufacturing plant down in Cincinnati. So basically for unskilled labor in Cincinnati, they had 88 vacancies in July. They raised their their bottom line wage to $17 an hour in Cincinnati. They pay benefits. They do all this type of stuff. They have 401k matching. To be honest with you, for somebody who doesn't really even need a high school diploma, it's not a bad thing that they can do, and they can move up and whatever in that company. But $17 an hour, so they had 88 vacancies. Now they have like 7. So, manufacturing, right? And they need those people to manufacture what they're doing. And basically, as I was explained it, they do this. So, yeah, immigration's coming back, 41,500 over the first 2 quarters. Obviously, we're going to see more and more. I think the third quarter, you're going to see that really just open, that the floodgates are kind of going to open on that. Labor market conditions have improved for youth aged 15 to 24 and part-time workers. To be honest with you, I don't really think there's been a better time if you're, high school or, university to go get a part-time job or a full-time job if that's what you want to do too. Everywhere I go, I see help wanted signs. I see people posting that they need workers. They were the primary benefactors of this employment growth, which I could see because a lot of older people left jobs that, we had guys who were working at restaurants for 12, 14, 15 years, and now we're filling them with, people who are that age. So I like this headline. Improving fundamentals cannot solely explain the recent growth in house prices. Well, we've talked about this a lot, right? Obviously, there was really strong demand, and where did it come from? So there's a couple factors. Obviously, number one is low interest rates. People don't look at the price of the house. They care about how much is this going to cost me per month. Number two, we talked about this. We talked about the Scotiabank report in which we talked about that Canada has the lowest number of households of any G7 nation. So that means we don't have enough houses to put people in. You have this demand and you have this supply. Well, that's going to cause the price to go up because there's more demand than supply. I, again, don't think they're going to fix that supply issue, although there's some interesting tidbits on certain cities about that right now, too. Basically, the degree of vulnerability in the housing market went from moderate to high because persistent overvaluation imbalances and now price acceleration imbalances. And then they go to say right down below, moderate evidence of overvaluation persists. So not high level, just moderate. Here's the thing. Beginning of the year, it's going stupid, but now we've seen improvement in fundamental house price levels. So that just means that obviously there's been a growth in the disposable income. So how much money people are making on average has gone up because obviously labor conditions have improved. And right now there's not enough people to fill the vacancies. And again, low mortgage mates, low mortgage rates. And you can see by this chart overall that it's really just above their threshold for overvaluation over all of Canada. I do not actually like when they talk about all of Canada because Canada is obviously a series of provinces, and from one province to the next, you can, have totally different rules, totally different fundamentals. So I really don't look at the national other than, okay, yeah, national, fine. And then I like to break it down a little bit more. Basically in all this, they're saying sales to new listings ratio, which is, in the first quarter of this year, almost 84% of all houses listed sold. In the second quarter, the sales pace slowed, and that's 73.5%. Things aren't selling as quickly, or not all properties are selling. That just leads me to believe that there's probably more supply and little less demand right now. And we saw this kind of in August. If people weren't listing homes, then we were seeing a lot of more bidding wars than even, I don't know, I just talked to somebody today, sold their house, had 22 offers. I mean, we sold a house last night. It only had 3 offers, but it still sold pretty well. And then we sold a triplex in Hamilton, and at offer day we didn't have any. And then 3 days later we got multiples, and we still ended up selling for asking. But it's just one of those things. It's all fun. Excess inventories remains low. We know that, right? Like, it's the inventory of completed and unsold homes per 10,000 population. So they'd like the threshold to be around 6. And we're right around 2, and it's falling. Like, it's like there's a cliff there. Like, the only time before that was 2002, 2003, and it was pretty sustained. And we had a pretty good little run up until that 08 period, when of course then it dipped again after in January of 2009, when the world was collapsing, but everybody still had a job in Canada and figured out, hey, I can still get a mortgage. And house prices have dipped a little bit, so they started buying. And then obviously rental demand has improved since the previous assessment. Students are going back to school. International migration's coming back, which typically they rent for 3 to 5 years when they get here. This is the vacancy rates across Canada is around 3%, but that's like October of 2020. So I'm going to tell you it's probably less. Basically, the nuts of this is that the first 2 quarters of 2021 were basically a record, either at or close to historical highs for a number of transactions. Obviously, prices have gone up across the country. Obviously Montreal and out east, not consistent with housing market fundamentals. So real wage growth, lowered interest rates, in migration. Yet, I'm going to say again, a lot of that leads to how big a supply issue is there. If there's a lot of supply, then prices won't go up that much. They don't really make a prediction on where they think it's going. Tale of the whole country is substantial gains in job markets contribute to income growth and home valuation appreciation. Low mortgage rates remain the strongest driver for home ownership. So one of the things I thought was really interesting, this is for Hamilton. New homes have been trending higher, but they do say that if you've driven around Hamilton lately, you'll have seen this. There's a lot of cranes going up. There's a lot of condos that are being built. Now, they're all pre-sold, yet I don't know how many are investors. I don't know how many of those people are going to be renting it out. In Hamilton itself, we need probably about 900 rental units a year just to keep up with ongoing demand. We really haven't seen that. But, there's 647 units under construction, with 2/3 of those being condominium apartments, right? So, 4,400. I don't know how many of those are going to be rented. They were talking about that there is actually a fair amount of purpose-built rentals being built at this time as well. So, and the highest level again since the 1970s. So definitely could lead to obviously more on the market. Yet again, me personally, I'm not worried about that. I still hold properties in Hamilton, and I still think we're going to see a rental price increase year over year. Listen, this isn't CMHC doing any predictions. This is CMHC telling you, hey, based on historical, what's happened, and what's going to go moving forward, we see these risks. Use this as you will. Enjoy. Catch you guys in the next one.